probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money. It's been too long since I heard that intro.
Hey man, Mike, I'm so glad we're back. We were off a week, but gosh, it just sounds like it felt like we're off for like a month, and I think it's because we're right in the middle of these 4 episodes, and today's episode is going to blow your mind. We're going to be talking about the 7 deadly sins of trading, and I'll give you a lead off on that. Basically, we're not just talking about losing trades. We're talking about the emotional connections that hijack your trading. Imagine this. Have you ever moved your stop? Praying for a rebound. Saying that prayer. Oh Lord, just please let me get back to break even so I can get out of this trade, only to lose more. Or maybe you bought the hype on Instagram or X where somebody's saying, oh yeah, you got to buy this stock right now. And you got stuck with a dog, dog, and that dog had fleas, and that fleas led to more bleeding and so, hey, or maybe, you took a loss and then you rage traded, that get even trading back to try to get even, but you went deeper and deeper in the red. Those are the 7, and we're going to talk about the 7 deadly sins of trading, and we're going to show you how to stop them absolutely cold. So Mike already kicked it off, guys. Welcome back. We're glad to see you. And so, Mike, when we came up with this idea of the set, because the other episodes kind of built off this concept of the 7 deadly sins. So last episode, we talked about the 5 pain points all traders go through and all that type of stuff. And this is just a, build onto that. So what are some of your thoughts about, we went from the pain points to now, hey, this is some of the root issues for why we have challenges trading.
Sure. So here's the thing about sins. Well, whether we're talking about trading sins or any kind of sin, they tend to sneak in when you're tired, when you're fatigued, when you're emotional, or even if you're just trying to prove something to the market, right? Like an ego-driven emotion that you might be feeling. That's when these sins tend to rear their ugly heads and tend to strike the most. Something like being like holding a stock that's fallen significantly, say like holding a stock past your stop loss, right? You're supposed to exit at a 5% loss. Maybe the stock gaps down. Now you're at a 10% loss. Oh, let me see if it bounces back.
Right.
And before you know it, you're down 30%. Not because you planned to hold it that long, but because you didn't want to admit the mistake.
Yeah, that aspect of admitting the mistake, and you mentioned it just sneaks in on you, and sometimes being tired, and a lot of people, when they look at trading, they don't think of it holistically, but but trading is dependent on your physical fitness, your mental fitness, your spiritual fitness, your relationships with your family, and they all combine, where if any one of those are out of whack, that it can impact your trading. It's so funny you mentioned that sneaking in thing. My wife and I, in April, we will have been married 51 years, right? And well, we had a fuss this weekend. We had a little bit of a disagreement. I think was what we call them these days. And the reason why was because I was tired, I was cranky, I wasn't necessarily hungry, but also I was in a rush to get a lot of things done. So I had pressure I'd taken on myself that and made me take it out on Michelle, and she wasn't very happy with that. She doesn't like it when I do that. And but we were able to talk it out because it was so funny. This argument happened right before we went to a marriage mentoring conference that we
That's perfect timing.
but it happened
That's
right
the reality of it too, isn't it?
Oh gosh, yeah. And so so we're sitting there in this conference, because Michelle and I are marriage mentors for Save Your Marriage Before It Starts. And we're sitting there and we're listening to what the speaker's having to say. And I was going, oh my gosh, and it happens that they hit almost exactly on every point that I should have known. I should have taken the steps to not, react the way I did and get upset and all that kind of stuff. And so the speaker, yeah, he really he read my book, and not Trade Your Way to Freedom book, but he read my book inside of, yeah, Dennis, you messed up. Anyway, so I'm sure that never happens with you and Melissa, but
No, of course not. I don't know what you're talking.
So let me ask you a question. Have you ever been in a position where you like doubled down after a loss to try to get even with the market? Because you mentioned that aspect of trying to get even, and why is that such a dangerous thought?
Because the market doesn't always come back, right? A stock doesn't always come back.
Right on.
And people have a longer term view of the market and saying, well, the market, it's been in an uptrend since, if you go back far enough, forever, right? Since the inception. But there's also periods where if you bought the peak in 2000, you had to wait 15 years to get back to even on that one.
That's right.
There's plenty of stocks that never come back. So if you buy down, and because you think that you know better than the market, then that's a dangerous game, because it might not. And a big part of trading, a big part of the longevity, you know this, I know this, and any trader that's been around knows this, that if you're going to stay in the game, you have to cap that downside.
Yeah,
that's the only way that you're going to be able to stay in this long term, because if you do double down, you'll eventually end up wiping yourself out.
Yeah, learning the skills to know when to cut your losses, don't move your stop losses, and sometimes you got to bite the bullet. Sometimes it hurts. I mean, if you have a 5% stop loss and it gaps against you and it goes down to 10%, and the temptation is just going, oh, I can overlook my stop loss this one time because I know it's gonna come back. I mean, I was guilty of that throughout a lot of my early years of trading. I would ignore that stop loss, and then when I would go back and review those trades later in the quarter or at the end of the year, and I basically said, and it would only be like 4 or 5 maybe trades during the year where I had taken my stop loss off, or I let the get away from me. And I went back and I did the analysis, and I said, well, if I would have taken my stop loss at 5% or even 10%, where would I be monetarily at the end of the year? Right. And I'll be darned if in every case I would have been positive for the year and profitable, because what oftentimes happens, and I think the market kind of tricks us in a way. Bear with me a second and share this story. Sometimes let's say the prices gap against you.
Okay.
And pow, as soon as it gaps, and let's say you left your stop loss in place, so you were taken out with the stop, and Murphy's law says, Murphy's law of trading says, well, as soon as you get taken out on the stop loss, I'm going to drop 2 more cents and I'm going to rally. right?
Yep.
And so in our minds, in my mind, I would sit there, I would remember that. And it wasn't necessarily a recency, that was kind of a recency bias, but I had
Mhm.
that picture in my mind that, okay, well, the next time this happens, I'm going to take my stop loss off the table and because it's going to rebound. But
Right.
the next time I took the stop loss off, wham, bam, I get slammed with a 20, 30, 40%, additional loss in the red. And that hurts because that leaves a scar too. And,
It
and so,
does.
y- and so what I found, if you want to, have as few scars as possible, have a great set of rules that
Yes.
that you can live with and that have an edge, and
Yep.
then don't violate those rules because folks, how you do anything is how you will do everything. And if you cheat
Absolutely.
on your rules, you're likely to be a cheater in life.
Hmm.
Ooh, that was heavy.
Sure was. One thing that I would add to that too before we move on is that if people have a plan, I like to call it having a trading business plan,
Right.
where you know the types of setups that you're going to take, and you've researched them, and you're able to study the how your setup moves and reacts, and
Sure.
what makes for a high quality one. In part of that study and research, when you're baking this thing out, you'll begin to see the types of setups that tend to have more of those gap downs,
Right
or
on.
what to
Right
look
on.
for. Oh well, this one has had a lot of gap downs in the past. Maybe that's one that I avoid, and that's on your do not trade list. And that could be something that helps you to mitigate those kinds of losses. Eh, you're never going to be able to mitigate 100% of them, but that's something that I've baked into my own trading business plan. And if it happens once a year, it's a lot.
Yeah, without a doubt. Yeah, I agree with you wholeheartedly. One of the uh, and so we've been kind of stabbing around what the first sin or the first of the deadly sins is, and so we might as well just throw it out there where people know it's pride.
Yes.
I mean, pride in, and a lot of times this pride that a
Mm,
person has about trading can come from their past successes in their profession, past
hmm
successions in what they've done in life, and they think, and I know, speaking for myself, I thought, well, it's totally transferable. I don't have to work as hard because I've been successful in all these other areas. I had a really
Yeah.
good resume. My pedigree was really great. And I think, "Ah, hey, trading's got to be easy." So I'd
Hmm.
ignore, and so how does pride show up, Mike, and for people when they're trading?
Oh, in the exactly how you just described. Um, so one of the things that I actually prayed about this, like, well, when I was held back for a long time. So, well, what is it that's holding me back, Lord? And the
Mm.
answer that came back to me was hubris. At the time, I
Oh,
didn't even know what that word was or what it meant. So I know that it was coming from the Lord. So I went and I looked it up. And it's ego. It's the refusal to accept help, thinking that you need to do everything on your own. And that I think that that's something that goes right along well with pride. And the solution to it is a healthy dose of humility,
right
being
on.
willing to reach out to other people, being willing to accept help. And that's what was a trust issue that I had too. Having the discernment to know what's good help versus what isn't good help. That's something that once
Oh,
I got that part of it, I was able to more easily accept help from the right people.
yeah. And one of the things, and I have to agree with Peter Brandt on this. You
Oh
know who
yeah, well,
Peter
what
is,
did he
right?
say?
Well, basically, he says, beware the guys that flash their checks at you. They'll basically they'll flash their trading account when they've made one big, monster trade, which happens occasionally, and they've made like over 100%, 200, 300, 400% on an individual trade. And he talks a little bit about, if somebody flashes that to you, be very leery of them, because they're not showing you their total body of work. I mean, if you
Right.
have one huge win out of 100 trades, but the other 199 trades just are absolutely horrendous, you could actually have a P&L that was in the red. And so
Mm.
that's one of the things that Peter talks about, is just beware the people who try to flash you with their performance, short-term performance, was basically, uh,
Yeah, that's
where if they
true.
have a,
And if you're consistent and you're winning a lot like that, those kinds of things are normal, right? Not
oh yeah,
normal where you're going to get 100% win all the time, but you start to act like you've been there before. And if you've been
right.
there before, it's not like, okay, here's a trade that went up 50%, 75%. Okay, if there's a teaching example in there, wonderful. If there isn't, then yeah, you're probably not going to hear about it because, well, what's the point?
Yeah, without a doubt. And so, one thing I want people to just remember, as and please chime in, folks, if if any of these are resonating with you. We like
Mhm.
to see the chats, and also if you have a suggestion for some of the for what we can cover in the future, please let us know, because we've got some other guests getting lined up to go into April, May, June, and so the thing to remember is, the second you think you've mastered the market, it humbles you.
Mhm.
So if
Absolutely.
pride's the gateway, is the gateway sin, greed's the addiction that makes you hold on too long and and so let's talk about chasing profits and the aspect of being a greedy SOB.
Sure. Sure. So I think that greed comes in a variety of different ways. It's not just the fear of or wanting to like go and grab more profits, or when you're in a trade. I think that it could also come about too when there's people that are fearful, right? A lot like the I think that FOMO could be tied into greed too, where you see other people making money, you want to make money, the kind of like that comparison
Oh
game.
yeah, yeah.
Yeah, and before you know it, you're jumping into trades that you shouldn't, that you don't really have a plan for, and that it an element to it is greed.
Mm. Is it because I think I see greed and pride kind of going hand in hand. I mean, they're almost
Oh, sure.
they're almost like dating or something. I don't know. Uh,
They're all
eh,
roots of the same tree.
yeah, without a doubt. And and so it's that aspect, as you said, wanting a little bit more, uh, even after your target is hit. One of the things that I that challenges traders and challenges me too is that, let's say I have a trade that goes up 20%, and
Mm,
I take my profits there,
right.
and then it continues to go up for 25, 30, 40, 50% sometimes, and I go, ah,
Mhm.
darn. So I know I've learned some hacks on how to fix that, where I can feel comfortable taking my 20% profit.
Mhm.
uh, but have you learned, how do you handle that situation um, where you see you've taken your initial profit, and then it goes, just keeps on going. How do you handle the psychology of that? And then I'll cover how I handle, and also the mechanics of that, and I'll follow up after you finish, Mike.
Well, before I had plans to deal with this, I would get upset. I would kick myself. I would then try to sneak my way back in, or try to pretend that, oh, I didn't really sell there. I still holding the original position, and try to like almost have this pretend scenario on.
Okay. Yeah.
Those things never worked out well in the end. What eventually became the solution for me was to bake this kind of stuff into the trading plan, because that's reality. Sometimes you'll sell, sometimes it'll look like you're Nostradamus and you got out at practically the exact point before it's about to roll over. Other times you'll look like a dweeb.
Yeah.
You sold way too early. What are you doing?
Yeah.
So that's where having good rules come into play, where it's not just, I'm going to be disciplined for this. Your rules should be built on reality for the body of work that you're trying to trade here. And so
Exactly.
I have rules that tell me how to scale out given the market condition. Right. So,
Yes.
so if we're in a choppy environment where my trades aren't working that well, then I'm going to be scaling out and selling quicker. If the market changes and we're starting to see a lot of stocks run further,
Sure.
I have rules that are going to help keep me in trades longer, and a
Yeah.
larger chunk of the trades in longer. You figure out the right rules for your business, and your business will serve you.
Yeah, I agree with that wholeheartedly. The big thing, and S. Jordan has asked something here. He goes, "Is it greed when you think have uh, you have a long-term leader like Nvidia? If you would have bought Nvidia back in 2021 or something before it ran up like 700% plus, and you're holding for the long haul." I think Mike just answered that. Is that basically, um, you know, ask yourself,
Well,
okay, what am I trading for? And you write
mm,
that into your trading plan and your trading rules and all that kind of stuff. If you're a swing trader and you want to target 25%, then and that's just basically that is what you're going to be doing. Then if it runs on past 25%, I have to I have to have a long talk with myself to say, hey, that's okay. Okay, that's okay if that does that. But at the same time, though, if I at some point I may want to shift to this could be a long-term winner. And so that's when for me personally, what I do is if I've gotten out at 25%, 25%, then I don't, oftentimes trader will take that stock off their list. They stop watching it. And
mm,
so they miss these intermediate pullbacks where they could get back in and get another run.
right.
Because once something starts to run like NVIDIA, it did give multiple opportunities to get back in. So
Mm,
learning, hey, I can get back in after I take my profit. If I want to trade it for the long term, what I do is I shift to what I call my longer term swing trading mentality. And what I do is I shift to taking my signals off of my weekly charts, and sometimes I even go out to a monthly chart. I
mm,
apply the same rules concerning like what I do around the moving averages and the momentum, and that allows me to hang with the entity for I will have sold out a part of it, but I'll be able
mhm.
to hang with that entity for the longer term gain, which is and so that's one of the approaches I do to coach myself up to say it's okay to get back into the game. And so if greed feeds the dream, well, lust is what sells the fantasy.
Mm,
Wow, that's heavy. So let's look at the hyped trades next. And remember that greed dreams, but discipline earns. So, what about this deal? Have you ever bought a stock just because it was all over your feed, your social media feed, or have you ever done that, Mike? I mean,
Oh, of course. I mean, trading for 26 years now. If that never happened, I think I've got a bridge in Brooklyn to sell you.
well, a question for you though. Okay, because you've been trading for a long time, as I have. Okay,
Hmm.
we did when we first started trading, we didn't have the social media the way it is now, right? I mean,
No.
we had Investor Business Daily, but you had to read the paper, and
Right.
you could do, there was some online stuff,
Yeah. When you
but
had to hear
but where
the
would we
dial-up
get?
modem.
Do do you remember where we would get our tips? I'll just say, the tips. Hey, you need to be trading this one. Where back in the day, and we're both dating. This is dating ourselves. Back in the day, where did you get your trading tips? Uh,
You don't want to
that
know.
oh, come
You don't want
on,
to know
man.
this guy that would push buttons all over the screen that said "bye bye bye."
Oh, that guy. Yeah, the guy who'd
Yeah,
say,
Jim
"Oh,
Cramer. That unfortunately, well, you know what? It turns out to be good lessons to learn and well, what not to do. And it's good to learn those kinds of lessons early on when you're dealing with a little bit of capital. Even though back then, to me, it felt like a lot. It was what I had back then, but better learn those kinds of lessons early than late.
yeah, right on, right on." And I guess, yeah, for me it was, something similar. I would hone in to what was on television at the time was uh, the investment networks or the investment TV shows, and so I'd hone in on that. And
Mhm.
but after I got, after a few years of listening to them, all they, what I found is the majority of them, like Jim Cramer and like some of the, was MSNBC or whatever the one
Mhm.
is that does the financial networks, is I would find that they were just trying to stimulate emotions to
Mm.
make us make a decision, and not typically decisions made with stimulated emotions tend to be poor decisions. And so there was that. And but I get all jazzed because I'd see some, CEO come on, and right before earnings, and promoting his company, and I get all jazzed, and we'll go out and buy the stock. I didn't know at the time that, right before earnings is one of the worst time in the world to buy the stock, right? because
Mhm.
because of the volatility. And the so you know what do we have today? We have meme stocks, I guess you call them.
Mhm.
Uh, buying breakouts with no plan, ignoring fundamentals. And so I basically try to stay away from things like meme stocks and that kind of stuff. And you have a routine for how you select your stocks,
Right.
so that stocks will qualify. So do I, and it's very similar. And then I also keep a stable of uh, um approximately 8 ETFs that have very strong leverage ETFs, where I can focus there, where I can basically shut out the noise. So
Mm.
it doesn't
Great
tickle
point.
my ears and tickle my brain, so I'm not lusting after those sexy stocks.
Yeah, no, if you have a wandering eye, it
There
gets
you
you into
go.
all kinds of trouble, whether you right, well, like whether you're out on the street or where you're in the market.
Yeah.
Uh, when you have a plan, a routine, when you it's one of the reasons why I think that you and I filter down to well, what stocks do I want to be trading? Well, I don't want to just be trading anything. I want to be trading the ones that give me the best odds of success. That's
Right
not going
on.
to be all 10,000 stocks out there. That's going to be just a tiny handful.
Right
So
on.
let's start there and then
Right.
have the way to narrow that down a little bit more too. Well, what are the setups that I'm going to trade? Well, that narrows down the playing field even more. And then you say, well, what makes for a quality one of these? And then that narrows it down even more. And so what you end up coming up with is this analogy. I think we spoke about it last time with Ted Williams. We want to be the Ted Williams of trading. Ted Williams was a Hall of Fame baseball player where if the ball was coming down a certain part of the plate, he was able to hit 400, and he analyzed all of his plate appearances, so he knew when to swing at what. Doesn't mean that he
Yeah.
would always get on base, but this one would give him the best chance of success. We want that for ourselves. And as traders, well, we don't have to swing at anything off the plate. There's no called strike. So we could just wait for it to come down the pipe, the fat pitch, swing at those, and then that's how we're going to be successful. And that's how we could stay prudent, and we could see how having that wandering eye, lusting over these hype trades like that, no, that's what's going to cause your account to die. Well, we
Without a
want to
doubt.
have success. We need to be prudent. Have your plan. Swing at the fat pitch.
Yeah, exactly. And it's so true. Because what I won't say we're dancing around it, but what is kind of the underlying foundation, the rebar that's in the concrete that holds this foundation together, is that we look for fundamentally strong stocks. But what we're doing, and then now we have a sound technical signal that tells us when to get in. And all that those things are doing is they're putting the probabilities of a successful trade in your favor.
Exactly.
And for so many traders out there, they may be afraid of probabilities and all that kind of stuff. And when I talk about probabilities, I'm not talking about, well, it's going to be 87.394%, chance of success. That's not what I'm talking about. And part of developing an edge is, when do you get past that 50% probability mark? And Bukowski, who did a lot of work on individual stock patterns, Thomas Bukowski, he basically said that once you get past 55% on your surety or your probability, you've taken the randomness out of selection, which is that's an interesting perspective. And so I just want to show everybody, one of the things that Mike and I put together. Let me see if I can get it up here. I don't want to remove that. I want to do this. I hope you guys like this wonderful art that we put together. And right now we're talking about lust. But I've been this guy, and I've gone through every one of those aspects, as I know Mike has. But let's go ahead and do this. Let me go back and find what I'm looking for here. Did you like this? Did you like this thumbnail, Mike?
That thumbnail's fantastic. You're a wizard when it comes to this stuff.
And so, yeah, one of the things that's really cool is both ChatGPT and Grok is getting where they actually do better with their image generation. So anyway, I just want to have some fun with that this morning. But if it resonates with you, that's great. So let's see. So here's a tip: set a rule to never trade or a ticker you haven't researched for at least 10 minutes. In other words, and one of the places I go to do my research, and then we'll move on, Mike, is I do my research on Investor Business Daily to make sure that I have a fundamentally solid stock. And if it isn't fundamentally solid, I throw it out. I say, okay, no, I'm not going to do this one. Now, there may be exceptions to the rule. Sometimes I will trade things like Tesla or Nvidia, if they have poor fundamentals. With that, I'm looking exactly at the technicals on that. So remember, hype fades, good setups don't. And so, hey, Mike's book, Mike, in your book, you help master emotional control. Tell us a little bit about your. Well, you got a couple of books right now. Tell us a little bit about those, and then we'll move on, because we're paying the rent with this. We're paying the rent with this one.
There you go. All right. So emotional control. That one would be in the Mara Mindshift guide. That one's behind me. There's two books behind me. We've got the Trading Mind Wheel, and we've got the Mara Mindshift guide. The Mara Mindshift guide is a trading beliefs workbook. So it gives you the exercises, and you could write your answers right in there, and it guides you through to challenge your beliefs, to bring a lot of the beliefs that you have about trading, about money, about yourself to the surface. Question those beliefs, make sure that they're aligned with your goals, so that way you're able to get to them. If we are trying to go down a road, let's say, and the road hasn't been cleared and there's potholes in there, that would be the equivalent of these limiting beliefs, where you're trying to go down the path of success, but it's rocky, it's broken. We want to try to repair the road of success, and then we'll drive down it, and that makes it a lot easier. That's what the Marrow Mindshift Guide can do for us. Speaking of emotions, right? When we are getting to, I think, the next sin that we've got coming up, Dennis. What is it?
Yeah.
Envy, right?
Yeah.
Comparison.
Well, here's your other book, man. Just want to put that up there.
Oh, well, thank you.
You're welcome. And so, yeah, the next one, because we're going to go from lusting after hot stocks to basically we shift to another trap, which is envy. And remember that the lust aspect, how do you take care of the lust aspect is you approach things from be prudent, be a prudent trader, a prudent investor. And so that's what, one of the things I love about, especially the trading mind wheel. And I'm really looking forward to getting your new one, basically,
which is Blueprint.
Huh?
The Trading Success Blueprint.
Trading Success Blueprint. And everybody needs to stay tuned, because Mike and I we're gonna try to work something out where you can pick up his new book, my new book. My new book is called The Busy Man's Guide to the Perfect Setup. In other words, we want a perfect trading setup, and that's going to be really good. But we'll have something. I promise you, we'll have something within the next week and a half where you can probably try to get both of them at the same time. And then, of course, my little work here that somebody named Mike Lamothe wrote the forward to is Trade Your Way to Freedom. And
wonderful. Everybody should be reading that one.
I keep going back over that book, and I just kind of like, because what is in that book is my total trading system that I put together over a 30-year period of time. It's been tested, tried, and I don't leave anything out. And to show you exactly how I enter, how I do my thing, some aspect on how to pick the best stocks and this type of thing. And so I cover that in the book. And I'm just amazed at, sometimes I sit there and go, wow, I didn't know I knew that much. And I'm not saying that to brag. It's just because my son helped me put it together based on all of the notes and all kind of stuff that I had from the years. So let's get into let's see. From lusting after hot stocks, we shift to another trap: envy. Watching others win and wondering why you're not winning. So what's up with envy, Mike?
It's one of the sins that I would make repeatedly for a very, very long time. It was one of the hardest ones for me to break, actually. And it's where you could see other people around you starting to do well and wishing that you had it, or when you had, it could be even with a mentor, right? Like, oh man, like they got it, why can't I get it? And what envy does is you're focused on the result and not on the process.
Yeah.
Right.
Oh gosh, yeah.
All these sins are distractions. The distractions of what we should be doing that's going to get us to the promised land, to where we want to go, and they're all trying to derail us in one way or another. They say that comparison is the thief of joy. I think that's. I don't know if there's a better way to say it.
Yeah.
The only thing that I think that we should be comparing ourselves to, in order for a comparison to be productive, we should compare ourselves to where we were, so that we
Yeah,
could start to see, are we improving, and where can we make adjustments? How can we
yeah.
use our past to improve our future?
I agree wholeheartedly. It's like I heard just this over the past couple of weeks. I heard this analogy or this advice, and it basically says when you get into this comparison situation, is one, develop a picture of where you want to be. Okay,
Mm,
what kind of trader do you want to be? And
right.
then ask yourself the question is, here's the trader I am today. Here's the trader I want to be. So
Mm,
that's your measuring stick to basically say, how do I compare to where I want to be?
mhm,
And I love what James Clear talks about in his book Atomic Habits. Uh, he basically he says that if you're focusing on results, you're focused in the wrong place. You want to focus on the process, because it's by focusing on the process and who you want to become. The results are the results are basically the fruit from focusing on the process and who you want to become. And as you get closer to who you want to become and your process gets stronger, the results take care of themselves.
mm. 100%.
Yeah,
But I think that there's a point here, Dennis, where people get this twisted, and I'd love to hear what your thoughts on this are, because you track your results month to month. I've seen your tracker, and you've got this really nice graphic that shows where you should be to hit your target each month.
sure.
How does
Yeah.
that fall into this, where you're not focused on that goal, but you do have an awareness of it? So can you speak to that a little bit?
Um,
Yeah, help people out. I think people get that part
well,
confused.
well, one of the things is that basically those are longer term metrics. Like I'm looking for monthly metrics, and I'm looking for also quarterly, uh, you know, semi-annual and yearly metrics.
Hmm.
And the reason I'm looking at that is it's like having a warning light on your car, on your dashboard of your
Mm.
car. Okay.
Great analogy.
And so if your oil is low, you're going to get a red light that comes on because there's a problem under the hood. And
Right,
so
right.
my line, I have a line that I picked up from Dr. Thomas Carr, uh,
Okay.
who is the Dr. Stocks. And what he said is that the majority, a good swing trading system should result in somewhere between a 40 to 45% profit, profit on a yearly basis,
Mhm.
and hit somewhere between 45 to, let's say, 55 or 60% win loss ratio. And so basically, knowing that on average, uh, um, a good system, swing trading system should produce that kind of results. Then I look and see how I'm doing. And then if I'm either on time, I use my 40% for the year line. It's just a straight line on my chart.
Mhm.
If I'm below it, I'm behind schedule. If I'm above it, I'm ahead of schedule. And that's
Mhm.
fine, but that's how I look at it. So but I will then go back and, like, let's say we've had a down month. I've had 2 down months. I've had February was, it wasn't grossly down, grossly bad, and March has been a real, tough month. And so how does it I want to go, how does it compare to the S&P? And right now I'm performing better than the S&P, so that's positive.
Mhm.
But what are the other characteristics? Okay, if what are the things that kept my system from performing the way I would want it to perform? That's put me behind schedule. Do I need to make any major modifications, or do I just, like tightening up stops, position sizing, those kind of things. And so by being aware of where I'm at allows me to then look at, okay, what needs to be modified. And it gets back to asking 4 different questions. The first question is, what's working? What's not working? What have I learned? Very important. What have I learned? And how will I apply what I've learned to trade better? And I do that basically on a weekly basis, Mike. And I've been doing that for a long time. And because anyone who thinks they're going to walk into trading, learn it in 2 or 3 or 4 years, and then be perfect from that day on, their expectations are false, and they will be very, 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 very disappointed. So I hope I answered that successfully.
You answered it extremely well, and so often I think that questions are the answer, and you laid out some excellent questions for us to ask ourselves. So yes, thank you. And I also love the dashboard analogy in there, because that's what our goal should be. It should be a lot like a little light on the dashboard, where you're not going to just stare at the dashboard all the time because you'll hit a tree. Right? You just glance down every now and again to see where you're at.
Yeah,
excellent.
And so, I mean, that's part of the deal. Like when I was flying, they talked about you would develop what they call a scan habit, where you would basically, you'd be looking out the windscreen to make sure you knew where you were going and doing your flying. But then at a particular, and it became innate. I mean, it became an innate habit, but it became an innate habit because I would practice it as a jet, as a naval aviator. And you would look outside for about, let's say 30, 40 seconds, and then flip into a quick zoom around the instruments inside the cockpit to make sure everything was, how's my airspeed, how's my attitude, how's my fuel situation, is the engine running too hot, too cold, that type of thing. And then and it just became habitual. I mean, it became a habitual, but the way it became habitual is I had to practice it. And guess where we practiced it? We practiced it in what we called your instrument scan. We practiced it in the simulator. And I'll just share one last little trick about that, is when we would get into an emergency type situation, or maybe we're going into attack mode where we had to be concentrated on the target specifically and not necessarily what's going on inside the cockpit, is you'd have a modified scan where, let's say you're looking at 10 different instruments. Your modified scan would be, well, here's my primary instruments that I have to look at. And maybe oftentimes there's only like 3. And I go, bam, bam, bam. Look at that, back to target. Bam, 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 back to target. And if you can learn to do that in your trading, where what's the most important thing you need to focus on for a weekly trading campaign, and then learn to focus on that, and keep it simple. Keep it simple. Maybe it's just I'm looking for one particular trade setup to happen. Like right now, I'm waiting for momentum on the weekly charts. The momentum indicators I'm looking for, I'm waiting for the momentum indicators to get down to where they're going to basically reverse. And I'm sitting on cash waiting for that to happen. And then when that happens, I know that I'll get price action that will confirm my waiting was proper. So let's see. What about your issue, like with, just briefly on envy, then we'll get to the remaining session. So anything else on envy other than it says, what do I say here? Right here, it says envy. Oh, how do you combat envy? It's by contentment. That's interesting.
Yeah, I think that's part of it. Where does contentment come from? Contentment comes from knowing your system, and knowing your system very well, and what it produces.
Yeah.
If you don't know your system, then you might think that, well, it's time for me to take action because here's somebody else that they're trading, they're making a whole lot of gains right now. My system has me in cash. And
Yeah.
if you start to envy that, then well, you don't know your system that well because you might, maybe your system is one where you're only in the market for, let's say, a third of the year where you're
Right.
really stepping on the gas, and most of the other time you're busy treading water. Every system out there goes through its own ebbs and flows.
Right
You
on.
have to
Right on.
know yours. You have to know your numbers because if you don't know your numbers, that's when the eye starts to wander and you start to get
Ooh.
distracted. And then when the opportune time for your system comes, you're way out of position. You're caught flat-footed, and it's just
Then you're
it's
caught.
where you just spiral. It's not a good
That's
place
when
to
you're.
be. You've got to
That's
come
when
back
you're
to these
caught.
things.
Yeah, that's when you're caught trying to catch up. And it's too late. You catch up.
Yeah,
And then we traders, we make decisions when we recognize, oh, I'm late to the party. Then that puts in a position to make dumb decisions. And I think contentment it comes from knowing I did the best I could at executing my plan of attack or my trading plan. And if I
yeah.
and so if regardless of the outcome, if I did the very best on that trade that I could possibly do, I can be contented in my results as long as
Mhm.
I haven't compromised myself. So, comparison with other people, envy, and all that kind of stuff is the thief of your edge. So now let's get real. When envy doesn't get you, gluttony will. So overtrading, we're going to call gluttony overtrading. Um, and how do you combat gluttony? Is by temperance. And so, um, do you keep trading just to feel productive, Mike?
No, no, that's something that I've gotten out of my system a long time ago. It's really I'm really just trading with that Ted Williams philosophy in mind. I want to swing at the fat pitch. If it's not the fat pitch, then I'm not going to swing at it. And it doesn't matter if somebody else that I highly respect is taking trades. If it's not mine, then I'm not
Mm,
swinging at it.
yeah, and that's hard, especially if we, because we all have, our trading heroes, if you will, or people in the trading world that we respect a lot, and we know if
Yeah.
they are taking positions, um, sometimes are we really sure they are taking positions? But if we think they are taking positions, we can go, okay, we can start second guessing ourselves, go and partly go, well, what's wrong with me?
Right.
What's wrong with me? But where does gluttony show up in our trading? It shows up in several ways. One, boredom trades. Well, I have to,
Yeah.
just I need I need a rush of adrenaline. So I need trade a little bit.
Well,
Taking
are
random.
people really saying that though? Are people really saying like, "Oh, I needed a shot of adrenaline," or is it just like, I'm at work, I'm at this job that maybe I don't really like this job,
Sure.
sitting at this desk all day. Let me just scroll, start to check the
Huh.
market. Oh, look at this! This is moving. I could probably take that, and I think that it's that kind of thing where it's almost a form of escapism
Well,
where you're trying to do it, and the dopamine hit or the adrenaline rush is more of the chemical thing that's happening in the background.
yes, and but the adrenaline dopamine hit becomes uh, becomes addictive. In other words,
Yeah,
and
it does.
so then that could be, they don't know they need it, but they get it, and they like it when they get the dopamine or the adrenaline hit. And so I don't think they're necessarily searching for that, but they have been conditioned that, well, if I take this trade, on my mobile, I'm sitting there going, oh, look at that, you know, uh,
Mm,
wow, Donald J. Trump's, media stock is taking off like a rocket ship, and I want to be part of that. Oh yeah, even though its fundamentals suck, they're terrible. And so
mm,
this is not a recommendation to buy it, guys. Don't go there. But oh yeah, I have to buy some now. And where that comes up with my trading is I have to be very careful with that and kind of keep my notifications down, simply because my idea, I've learned to control my emotions and also control my gluttony is and the rest of the sins that we're talking about here today is that's why I only trade after hours with
mhm.
conditional orders or the final hour of the day, and for good reason. But oh boy, that devil trader that's inside of me that tries to convince me to follow these 7 deadly sins of trading. Yeah, he's trying to convince me to, hey, throw all the stuff you believe in out the window, and because hey, this time it's gonna work out, or this time
No,
it's gonna be
sure.
different. And so, anyway, hey, so being temperate in our trade, remember that cash is a position also, you know. Uh, and so if you're a day trader, you might take, multiple trades during the day, but have your rules set where you have a cutoff point so you can stop, because so you don't want you, we don't want you to overdose on dopamine and adrenaline. So tip is set a max number of trades per session or per week and walk away when you've hit them and just stop it. And so over trading feels like progress. And we've talked about this in the past, but it's usually just noise and or that trying to satisfy something inside, which could be an addictive type situation. So when
Yeah.
gluttony fail, wrath, anger takes the wheel. So let's talk a little bit about revenge trading, Mike, as we move towards wrapping this up. So revenge trading, what's up
Yeah.
with that?
So this shows up as things like doubling down, chasing losses, right? So you lost on a trade, so let me go and double down on that one, or I just lost this trade, so here comes another setup that's almost there. It seems to be moving in the right direction, so let me hop on that one so I could try to make my loss back a lot quicker.
Yeah.
Um, all these things fall into the category of revenge trading, risking more than you
Mm,
might typically, right? Taking well, if I risked, if my position size was 10% of my account on this one and it turned into a loser, well, let me risk 20% on the next trade, and if that one's a winner, then it'll take me not just back to even, but I'll be back at equity curve highs.
yeah.
It's those kinds of things that all fall into the category of revenge trading, and it's saved by patience.
I agree wholeheartedly. Yeah, the aspect of that revenge trading, that again, just being angry. And so I think one of the things, if you've been on a losing streak and with the current market conditions, could very well be you've been on a losing streak for, gosh, several weeks and or months, and you seem like, oh man, every time I place a trade, I'm losing. And so just ask yourself this question. Well, when you come to putting a new trade, is am I following my system or am I trying to just get even?
Mm,
And if the answer comes back, well, I'm just trying to get even, then avoid that trade or take other steps to reduce your risk, such as reduce your position size, which is a great idea, or
mhm.
even paper trade. That's one thing I like about Schwab's Think or Swim account, and I know you can do this also on TradingView, is you can set up paper trades, Mike, and so you're still getting to go through the process and the mechanics of it. And so that will help a little bit. But then you can say, okay, what did I learn from that? And let me tell you, I would much rather take a paper trade loss than a real money loss, because at the end of the day, you can go to your paper account and push that little button and you get all your money back. And I've been looking for that.
Right?
I've been looking for that button for my real account forever, and I just still can't find that. Push the button and get all your money back.
Oh man. It well, one other thing to add to that too, if you're just starting out, if you just take this basic step of defining what your setup looks like. How
Yeah.
long should it be? Like how many bars or how many days or weeks long should this base pattern be? Have a minimum, have a maximum. Just having that alone, that'll help to filter out so much of the noise because you have set parameters. Then
Right on.
how deep should this thing be? Right? Is there a minimum or a maximum depth? Then you're starting to enter into the quality sphere. If
Right on.
and you're writing all this stuff down, but if your plan looks like this, blank sheet, then that's where things like wrath start to come in, because you think that, well, I'll just double down and make this back. It's the market. It's this. It's that. Well, maybe it's the blank sheet of paper.
Yeah. Hey, is it okay if I provide people with what I call the 6 pillars of trading? If you're building a trading plan, you need or a trading system. The 6 things that are must to be on your the starting points for your list. Is it okay if I call that out to people right now?
Yeah. If you think that we've got enough time to go through all 6, sure.
No, but yeah, it's going to go really fast.
All right.
Is 1, I want to define what I'm going to trade, whether it be a great fundamentally strong stock or a strong ETF. 2, I want to determine, okay, when am I going to exit? Or correction, when am I going to enter? Number 3, when am I going to exit? That's for both a profit and a loss. What strategy I'm going to use. And then number 5 is, what are my expectations for that particular trade based on data? And then number 6 is, hey, maybe I need a mentor to help go through this with me. Now, a mentor may be somebody you pick up their book, you pick up Mike's book, you pick up my book, and we become your mentor through the written word. But also, Mike has a service for mentoring. I have a service for mentoring. So that opens some other opportunities for you to get, because, having somebody check up. But yeah, those are the 6 points, Mike. Just, what to trade, when to enter, when to exit, what strategy I'm going to use, what I'm going to expect, and oh my gosh, do I need a mentor? Do you like that?
I think that's wonderful, and I think that it goes right into the last deadly sin, because what you identified is pretty straightforward, pretty easy, and the one thing that I feel might be a reason why somebody might not take that step is sloth.
Ooh, sloth.
Laziness.
Yeah, sloth is so fun to say, though. Sloth. And they're such cute animals, but they move so slow. And so, sloth.
And when they work their way into your trading, look out.
So yeah, the thing about it is I heard Jim Rohn in person many years ago, and he basically said, he said basically, the solutions are easy to do, but he goes, they're also easy not to do.
That's right.
And then he would follow up by saying, choose your easy. And depending on, which, where you want to be 5 years from now, 10 years from now, choose your easy. Or you could also flip that and say, okay, choose your hard, because choose your hard in that, taking the steps to learn a trading system will mean getting off your ass. It's going to be basically changing your mindset. It's going to be basically saying, I'm going to become a diligent person. And again, it gets back to what we started off with about it's not focusing on the results, because the results are the results are what we want, but it's focusing on the process and our identity, who we're going to become. So,
Mhm.
if you've ever skipped your trading prep and then winged it, you're lazy. If you don't journal, you're lazy. If you don't have a risk plan, you're lazy. Uh, and if I'm hitting too close to home, tough. And no position tracking, you're lazy. So, Mike, you want to summarize that?
Yeah. Yeah. Well, how about this? Just because you've been any one of those things, it doesn't mean that you need to continue being those things,
Right on.
right? Just
Yeah.
because you were lazy, it doesn't mean that you have to stay lazy. You
Right
know what to
on.
do. Get up and do it. Or
Yeah.
if you're happy with the results that the laziness has gotten you, then great.
Yeah.
Keep doing more of it because that's what you get. But if
Oh,
you
yeah.
if
Right.
you want different results, you have to do something differently.
Yeah. You have to establish both different beliefs and different habits. And that's again, refer back to James Clear, what he talks about in his book, Atomic Habits. He basically says, take a look at your life, and wherever you are in life right now is the
Mhm,
results of your beliefs and your habits. Your
mhm,
habits have gotten you to where you are right now. And if that is really good, great, steady progress, then celebrate that and say, okay. But and if it's not, don't. But I'm firmly believe, at my point in life, I'm still seeking. My wife and I had a discussion. We've been married for 51 years, and we basically had a discussion this weekend and said, what new habits do we need to establish in our relationship so it can continue to grow, be better going forward into the rest of our life together? And
Wow.
and and so
Wow.
and we came up with a really good list of things, okay, that will improve our communication and also in our enjoyment of each other. So so always, as Mike said earlier, the only person you have to compare yourself to is you and the you want to become. And so put a high, set a high mark. And again, if I was a little bit
Mhm,
too much in people's faces about, you're lazy, the aspect about it is sometimes we need to have an honest talk with ourselves, Mike. I know you've had those discussions with yourself. I've had those discussions with myself. I know we've prayed about, uh, things in our life that need to be basically things in our behavior that need to change, and
mhm.
then put it in God's hand to help us, give us the strength to change that. So
Sure
that,
thing. Love is not coddling. Love is truth. And
yeah, right on.
the
Yeah.
best way to love people is to give them the truth.
And so through diligence and discipline, and so diligence saves you because it keeps you sharp and also keeps you sharpening yourself.
Mhm.
Mike and I like to communicate back and forth with each other because I sense that we believe in the truth that iron sharpens iron, and we want to
Absolutely.
sharpen each other to be our best, so that one, we can do these podcasts and hopefully touch many, many lives with both our, what we know about trading and also what we know about faith. And
Mhm.
so hey, spend 5 minutes after market close writing down what went well, what didn't. That, in other words, those four things we talked about earlier. And if you'll do that, commit to that for 90 days, again, write down what went well, what didn't, what did I learn, and what am I going to do different. If you do that on a daily basis as you're in the market, I'll guarantee you in 90 days, you will become a better trader. So, Mike, you got any also additional suggestions on that?
Ah, I think that wraps it up, man. I think that I think that we've got to beat these sins, because if not, it's going to bury your account.
Yeah.
One step at a time. One step at a time. It's easy to get overwhelmed trying to think of all this stuff in its totality. One step at a time. Get around other people that are on a similar path, and you end up helping one another. And
Right on.
I think that's what's helped me. That's what's helped you, and that's why we've got this podcast trying to help others out there.
Right on. And so anyway, folks, hey, leave a comment about which of the you leave a comment either now, or if you watch this again on Spotify, Mike's YouTube channel, my YouTube channel, if you're watching over on X, LinkedIn, or Facebook, leave a comment about which of these sins of trading impacts you the most, and share this episode with one trader you care about. Because no one beats the game alone, and both Mike and I.
True that.
And so, yes, Jordan, they are. Both our books are available on Audible. And so next week, we finish up our episodes, the 4 episodes that we talked about, and we're going to be diving into the invisible traps that even the most disciplined traders fall into. You won't see them, and you won't see these traps on a chart, but they'll wreck your results if you don't catch them. So mark your calendars for next week. Trade smart, fight back, and we'll see you next time. And as I like to say, aloha and God bless. Mike, it is so great to be back doing these live sessions with you, man. I just appreciate and love you to death.
Absolutely, brother. Missed you, loved you too. Glad to be back. Take care, everybody. Much love. God bless.
See you guys.